Imagine, there is a man. He is wearing simple clothes. He appears to be someone unpretentious. But he earns $1 billion a year. Yes, you heard it right. $1 billion. So, what does this man do? Did he invent a rocket? No. Did she create a social media app? No. He manages a hedge fund. In other words, he makes money with money. And he does it so masterfully that he can shake an entire country economically. He says a word and the market crashes. He buys a stock and the world keeps turning. No one knows his name, but everyone is affected by his decisions. But how? Can hedge funds really be this powerful? In this video, I'm going to reveal the secrets of hedge funds to you, but not in an ordinary way. With real events, with unknown strategies, and with the dark sides of the matter. My editing might not be very good, but what I'm saying is definitely very important for you if you clicked on this video. If you listen until the end, you'll see the world of finance from a completely different perspective. If you're ready, let's begin. Let's start with a fundamental question. What is a hedge fund? Hedge funds are similar to investment funds, but they are not the same thing. What do regular investment funds do? He will take your money. He invests in stocks, and it provides a certain return at the end of the year. It is safe, but it is not exciting. Hedge funds, they take risks, but they don't just take risks. They manage risk and tries to win under all circumstances. Is there an economic crisis? An opportunity for them. Did a war break out? Another opportunity. Did the interest rates increase? It's time to make money. Hedge funds are not investors for good times. They are hunters, always on alert, seizing every opportunity. Who are they open to? Is it for me or for you? No, only for accredited investors. In other words, millionaires, heavy corporates, rich families, giant pension funds. If you have $10,000, you can't just go and say, I want to invest too. This is a club, and it's a very exclusive club. You need to show wealth to get in. A brief history. Where did they come from? The concept of hedge funds emerged in 1949. The first person to establish a hedge fund, Alfred Winslow Jones. He thought about hedging investments, meaning protecting against risk, and he combined short positions with long positions. This was the first strategy, buy and sell at the same time. But over time, everything changed. In the 90s, hedge funds exploded in popularity. In the 2000s, billion-dollar funds emerged. Today, the money they manage exceeds $1 trillion. Not just investments, they've become a systemic force. What's the most interesting thing that comes to your mind about hedge funds? Share it with us in the comments. And don't forget to subscribe to the channel, like the video, and turn on the notification bell. Now, let's continue where we left off. What makes hedge funds special? They are subject to limited regulation. Institutions like the SEC cannot monitor them strictly. They can invest in everything. There are no limits. Stock or share? Yes. Cryptocurrencies? Yes. Artworks? It could be. Even weather forecasts can be useful. They can make decisions very quickly. Today, they will buy $1 billion worth of stocks. They will sell it tomorrow. The next day, they switch to the bonds of a different country. They are agile. They race against seconds. They aim for high returns. 10% is not enough. 30%, 40%, even 50% is aimed for. For this, algorithms, artificial intelligence, and even satellite data are used. So, how do these funds make money? Are they only buying shares? No, their strategies are much more complex. If you think a stock will fall, you borrow that stock. You sell it. You buy it back when it gets cheaper. You pocket the difference. You have 10 million, but you make a transaction worth 100 million. It's great when you win, but if you lose, disaster. Options, futures contracts, swaps. Risk is distributed with these products. Opportunities are created. Company mergers are monitored. Money is made from price differences. But what if this strategy is played with insider information? Legal issues arise. Countries, central banks, geopolitical events. They analyze the whole world. They take positions, and even the currency of a small country can collapse because of their move. 1992, George Soros. He played against the Bank of England. He thought the pound was excessively overvalued. Short led. He made $1 billion. The UK exited the ERM. 2007, John Paulson. He took a position before the housing market crashed. He shorted the subprime mortgages. He made $4 billion. 2020, Bill Ackman. During the COVID period, he appeared on CNN. He said everything could end. The market crashed. Ackman, on the other hand, had taken a position in the background. He made $2.6 billion. The world's largest hedge funds and their characteristics. 1. Bridgewater Associates. Founder, Ray Dalio. Assets under management, $124 billion. Strategy, global macro. Slogan, the economy is a machine. Everything is analyzed and a model is built. 2. Renaissance Technologies. Founder, Jim Simons. Assets under management, $130 billion. Strategy, quantum and algorithms. algorithmic. Mathematicians work, and the market is beaten with data science. 3. Man Group, based in the United Kingdom. Assets under management, $160 billion. Strategy, diverse, hedge, quant, trend following, flexible structure, global impact. 4. AQR Capital, founder, Cliffus Ness. Assets under management, $100 billion. Strategy, factor-based investing, scientific approach and academic analysis. 5. Citadel, founder, Ken Griffin. Assets under management, $62 billion. Strategy, multifaceted, arbitrage, fixed income, equities, one of the most aggressive funds on Wall Street. Scandals and criticisms. Is everything all sunshine and roses? No. 1. Speculation. They can cause panic during times of crisis. Is this ethical? It's debatable. 2. Insider information. Some funds establish close relationships with executives. They obtain information in advance. This is illegal, but it's difficult to prove. 3. Power against small investors. Remember the GameStop incident? Reddit investors stood up against the funds. The funds lost billions. It was like a revolution. So, can you enter this world? Yes, but it's not easy. You need a good school, like Harvard, do an internship, build a network, prove yourself. Then the applications begin, but the interviews are brutal. Build an algorithm. Pick a stock. If you had $100 million, where would you invest it? What is risk? How is it calculated? Intelligence is essential, but it's not enough on its own. Psychology, stress management, teamwork. All of them must come together. So, all this wealth, all this power, all this strategy, what does it teach us? We are learning one thing clearly. In the world of finance, the winners are not just those who know the numbers. Those who understand psychology, history, politics, and human nature are the ones who succeed. Hedge fund managers not only look at charts but also at people. They can even make inferences from a leader's wink or an economist's tone of voice, because information is not only on the screen. And here's the beauty of it, you can learn this information too. Yes, it might seem complicated at first, but as you become more curious and learn more, you can become a part of this world too. Maybe you won't start a hedge fund, but when you invest, you'll be more conscious. You won't be deceived. You won't be dragged along by the trend. You'll figure out the game too. Remember, the biggest investors of today once were just the ones asking questions. Ask to research and discover. That's exactly the purpose of this channel. To explain the financial world in a fun, simple, and powerful way. And to guide you. If you enjoyed this video, subscribe to the channel, hit the like button, and don't forget to turn on notifications so you don't miss more videos like this. See you soon.